Do you remember back during the pandemic that there was a little provision that gave you the benefit of charitable donations regardless of itemizing on your tax return? What the heck does that mean? My name is Paul Vasquez with Tax Lab, and you need to become an ethical millionaire. So, charitable donations. Traditionally, charitable donations are only deductible if you itemize or you do not take the standard deduction. Now, with a high standard deduction, there may be many people who no longer bother with calculating and saving receipts of everything they donate, of everything they itemize, and in fact, maybe some people donate less because of that large standard deduction. However, there must be somebody out there with powerful lobbying dollars among these charities who don't pay taxes normally and could benefit in their business model of hopefully giving to those in need. And so to bolster that during the pandemic, they said, hey, regardless of whether or not you itemize, we're going to add a little line on the main form of the 1040 where you can put down up to $300 per person or taxpayer, right? Married filing jointly, $600, $300 for individuals on the tax return. Well, that is back and it's bigger. That's right, with the one big beautiful bill. Now, the limit's $1,000 per person or $2,000 for married filing jointly that you can put on top of that Schedule A. Now, an interesting little tidbit here is I'm not seeing anything on this little rule. There's only like two lines. One says they're striking through the 600, the 300, 600, and adding in 1,000 and 2,000. And then the other is the effective date. This is going to start after December 31st, 2025. So that means during 2025, it's still going to be the same rules. That 2025 tax return is still going to be under the same rules. 2026 and then on are under these new rules. And the interesting part is this. There is normally a limit on an Schedule A. So if you are highly charitable and you've reached that 50% limit on what you can do on an itemized deduction, you can now throw another $1,000, $200,000 more on top of the Schedule A, because doing this does not exempt you from itemizing. You can still itemize, take up to 50% and get just a little bit more, I suppose. That's the way the rule is reading right now. Will they apply different rules once they catch on to this sneaky little maneuver? Maybe, maybe not. But it's right there. Once again, this starts in beginning after December 31st, 2025. So that means tax year 2026. So if you've already made that $1,000 contribution, good for you. Helping out, hopefully, the less fortunate. And maybe you'll do that again in 2026. If you want a tax plan that's engineered with all these new additions to through the tax code, with how they apply to you and your life, lab.tax, click on advisory services. You need to put these things in play before the end of the year if you qualify, if they are available before the end of 2025. For those that can be applied, you need to do that in 2025 if it's a rule that applies for 2025 or 2026. But you need to do it ahead of time. You can't look back and go, let's pretend. That's called tax evasion and tax fraud. And I don't do that. You got to find some other joker to do that. This joker doesn't do those kinds of things. There's so much available to us in the rules. You don't have to go outside of the rules to get a good deal. So why give yourself unnecessary risk just to save a few $100s in taxes, why not just take all you can that's legal and under the rules and move forward with life happy and content that you did your best. I wish you guys all the success.